Assessing the health of the Brazilian economy in April 2025 presents a complex tableau, far removed from a simple affirmation or negation. As Latin America's dominant economic force, its trajectory carries significant weight, yet judging whether it is doing well necessitates a nuanced look beyond headline figures, considering structural impediments, social outcomes, and the prevailing global economic climate. On the surface, there may be tentative signs of resilience. Recent GDP figures might indicate modest growth, potentially continuing a slow recovery trend from previous downturns. Inflation, while likely still above the official target range, may show signs of moderation compared to recent peaks, although this often comes at the cost of high interest rates maintained by the central bank. Certain sectors, notably agribusiness driven by global demand, often display robust performance, contributing positively to the trade balance. Furthermore, official unemployment statistics might indicate improvement from post-pandemic highs, though the quality and formality of employment remain critical considerations. However, substantial challenges persist, casting long shadows over the outlook. The central bank's benchmark Selic interest rate, kept relatively high to anchor inflation expectations, continues to act as a significant brake on domestic demand, private investment, and access to credit, disproportionately affecting smaller businesses and lower-income households. Fiscal policy remains a major constraint. Ongoing debates about public spending controls and the substantial national debt burden limit the government's ability to undertake crucial public investments in areas like infrastructure, education, and social safety nets. Investments vital for tackling Brazil's profound and persistent social inequality. While headline unemployment may have fallen, issues of underemployment, widespread informal labor lacking social protection, and skills mismatches remain deeply entrenched, hindering broad-based improvements in living standards. Long-standing structural issues, including low productivity growth, a complex and inefficient tax system, despite ongoing reform discussions, and significant logistical bottlenecks, continue to impede Brazil's potential for more dynamic and inclusive growth. Externally, Brazil remains sensitive to fluctuations in global commodity prices, shifts in international financial conditions, particularly U.S. interest rates, and the economic performance of key trading partners like China. Navigating this complex international environment while simultaneously addressing domestic structural weaknesses and pressing social demands requires a delicate policy balancing act. In conclusion, the Brazilian economy in early 2025 displays elements of resilience but faces formidable hurdles. A definitive verdict of doing well remains elusive. Achieving sustainable and, crucially, equitable progress hinges on successfully tackling deep-rooted structural inequalities and productivity gaps, alongside prudent macroeconomic management responsive to both fiscal realities and urgent social needs. The Channel of Brazil, your window onto the Brazilian socio-political landscape.